All right. Welcome back, everybody, to a brand new YouTube video. If you guys are new to the channel, definitely go check out the strategy series as well as the beginning to funded series, which will help you guys start to understand trading and how you guys can get there. If you guys want more information or anything else like that, please feel free to join the private mentorship. Yes, it is a paid mentorship at discord.gg/leverage. We have a Discord group where we run live streams daily. We do trading daily, we do community service, we do a bunch of things that we will be able to do within the server. So if you guys are interested in that, definitely go check out the private mentorship at discord.gg/leverage. So today's video, before we jump into it here, is going to be a liquidity raid versus a break of structure. We're going to talk about areas where we can actually assume something to be a break of structure versus the opposite where it is just a liquidity raid. We're going to use the example with gold as far as what actually happened today. This is something that happens all the time, so you guys will be able to understand that. But first things first, we're going to talk about the definitions of a liquidity raid for a break of structure. So let's go ahead and do that now. Now, first thing is first, what is a liquidity rate? Now, a liquidity rate is going to be a rate at any area of equal highs or lows, any previous highs or lows, or any area of trendline liquidity. So with an equal high or low, this could be in the form of this, where price is making some equal lows. We get a push up and the liquidity rate comes through those lows, and we get a rate of that liquidity, and then price continues in a given direction. Now, previous highs and lows, this also forms with a previous high or low here. So that kind of goes with the same exact thing. And trendline liquidity can be formed as price is moving to the downside, as price is moving to the upside as well. It's just going to form a trend line, and then you'll see a raid of that trend line liquidity and then continuation in a given direction. So we'll see our trend line liquidity, we'll see a raid to the downside, and then we'll see price continue to push to the upside. That will be a liquidity raid for trendline liquidity. This will be your raid. What the whole point of a liquidity raid does is it opens up liquidity within the market for your market makers, your algorithmic liquidity to be able to enter their positions and continue the market in a given direction. Now, the best example of this is as price is moving up to the upside, they push price to the downside, they enter their shorts to get people into shorts and start to get their short positions with their stop losses above these highs right here. So once they start to do that, and once they start to manipulate price to the downside, that opens up liquidity into the market when we get that raid. So now liquidity is available because people are getting out of their long trades and they are getting into shorts for the long side for them to be able to get into their long positions and push price to the upside and continue to push that way. Now, that was a liquidity raid. It's a little simple to understand. We just need to understand the definition. But moving on to a break of structure. All right, now what is a break of structure? Now, a break of structure is going to occur when a previous strong high or low is broken with imbalance. A strong high or a strong low is a low or a high that caused a new high or a new low. If you guys want more information on that, definitely go check out the strategy series as well as that beginning to funded series. So that will be able to give you guys more information on these break of structures as well as these liquidity rates. This whole point of the video is just more so liquidity raid versus a break of structure. But a break of structure is going to occur when a previous strong high or low is broken with imbalance. So at this point in time, we are trading strong highs, prices coming down. We have weak lows, prices seeking the weak lows. So we have strong highs seeking the weak lows, strong highs seeking the weak low right here. Now, the break of structure occurs when that strong high is broken to the upside and we create an imbalanced candle. Price then creates a higher low, and then we get that second break of structure confirming that continuation to the upside. So that's when price breaks structure, and that's when we can confirm it as a break of structure. Now, how can you tell that this high isn't going to hold and it's not going to come up, create that lower high, and continue to the downside? That's going to be your liquidity rate. So to form a reversal in any sort of way, we need to look for that liquidity rate and then a break of structure. So we put both together to not be able to confuse one after the other. A liquidity rate is just going to be that wiki behavior. And we'll show you what I mean by wiki when we show the charts here in just a second. But a break of structure will be that strong high or previous low that was taken out with an imbalance, creating that break of structure. All right, candlestick examples now. As far as liquidity rates go, the best way to understand a liquidity rate is going to be looking for candles with wicks. So if we notice those candles with wicks, we can also notice the areas that they are at as well. So understand in areas of imbalance, areas where there is open liquidity, areas of discount, price moves down into discount, starts to raid liquidity there. And that allows for, once we get a break of structure, price to continue to the upside. So it starts to move to the upside after raiding liquidity to the downside. Now, because if we're watching our structure here, we were coming up, we're very bullish, we're very bullish. Now we're bearish. We got that bearish break of structure to the downside. Market structure is showing bearish. So what are we looking for? A liquidity rate and a break of structure to the downside, holding that previous strong high. So if I'm looking for my price, I'm watching price, I'm watching how it's creating its lower highs and lower lows, starting to come up, still higher highs, higher lows. Now we're getting a lower high and a lower low, lower high, lower low. That's the double that's starting to show that double break of structure to the downside. Now all we need is the rate and the break of structure to show when price is ready to reverse. Here comes that rate of liquidity. We get a previous high taken out. Notice how this high right here does not take out the full strong high, and then it breaks structure to the downside. Now if I go on my lower time frames from my 15-minute to my 5-minute, we can look for where that break of structure occurred. We can find the candle before candle, and we can take that to the downside. So here is that break of structure. We can see the candle before candle that formed kind of that entire zone. So we got that break right here. That candle before candle that formed that entire zone, that area of supply for price to come into and then continue to the downside. So a liquidity rate is always going to show that rate of a previous high or low followed by that break of structure. So you look for your wicks at those previous highs or lows, and then you look for a break with imbalance. We got the break with imbalance. We got the break with imbalance following all of those raids and that first break of structure. So lower low, lower high, lower low, mitigation, liquidation, and then creation as we continue into those lows. Now, that is a short version of the liquidity rate versus the break of structure. I definitely suggest you guys go back and look at these in your candlestick examples as well. Go look at it and see it in your charts to be able to see it in your eyes, in your perspective. That's going to help you out the most. If you guys had any questions, wanted to hit me up on Discord, feel free to do so at 1xflow. Must add me first. I do not add anybody first. And then we'll go ahead and do that. But we've been doing very, very good in the 1% server, growing well. We've started the Top Step account, past the account, and now we are trading that along. So definitely, if you guys want to go check that out with us, feel free to do so at discord.gg/leverage. But thank you guys for joining and watching today. This is what I had for you guys today. If you guys have any questions, please feel free to ask on the channel if you guys want to see anything more as well. And if you guys found value, please feel free to like and subscribe for more. So I appreciate everybody that again joined today. I will catch you guys on the next one. If you had the patience to make it to the end of this video, you have the patience to do what it takes to be able to trade. So again, thanks to everybody that popped out. I will catch you guys on the next one. Peace out, everybody.